Now the price chart in front of you is that of soybeans, and as you can see in today's trading, we've penetrated the lower boundary line of a very small corrective price channel. What this actually does is it argues that wave 4 is complete, and the stage is now set for wave 5 of 3 down to 815 to about 804 and a quarter. What I'm going to be looking for in tomorrow's trading for confirming price action is movement back to below the prior swing low, which is right here, but better yet, actually the extreme of wave 3, and I believe that comes in at actually 855. Once we see that price action, that will confirm that wave 4 is indeed done and wave 5 is underway, targeting again 815 through about 804. Now, bigger picture, we do have a number of subdivisions that we still require. We're in essentially the late stages of this wave 3 decline that I believe is going to actually push lower down to the $8 a bushel handle. And then at that point, we still need a blue wave 4 to match this big wave 2 up here, and then still further decline. So don't be surprised as we move into, say, possibly October and November, to actually see prices fall below $8 a bushel and put some serious pressure on this 775 through about 750 handle. In fact, basis the weekly price chart, we actually have some lower targets coming into play at 660 through 3/4 through 671 and 3/4. Now those levels are derived from the internal substructure of the impulsive decline that we now have identified off the 2012 high. And here at 660 and 3/4, that's where wave 5, this wave 5 will equal the distance traveled in the original wave 1 right here. And all I'm simply doing is applying the Elliott wave guideline regarding wave equality, certainly within impulsive structures. And then below that at 671 and 3/4, that's where wave 3, Roman numeral wave 3, will equal a 2.0 multiple of its corresponding wave 1. A typical downside objective for a third wave price move, certainly once we exceed the 1.618 multiple. Now also one thing that's to keep in mind as well, as we build up these levels of Fibonacci support, we're currently sitting on one retracement right now. That's the 50% retracement of the advance that began in 2002. That comes into play at 862.5. And then below that, the 618 retracement of that move up comes in at 726. Now, I've recently received a question, how do we utilize really all these Fibonacci levels? I mean, is this move to the downside, where is it actually going to go? Is it going to go to 726, which again is the 618 retracement of the 2002 advance, or are we simply going to go lower down to 671? Or possibly the market stalls and we say only push a little bit lower down to 746. How do we utilize these multiple Fibonacci equations, or not equations, objectives within the actual impulsive decline? Well, the way I like to utilize these is I like to utilize our Fibonacci levels as, really simply put, as milestones, objectives. And once I achieve one objective, I then set my sights on the next objective. Now that actually brings up a good question, and we'll utilize the current intraday slide of soybeans, and I'll try and explain myself more clearly. Now, right now, we have an initial objective to the downside of 815 and 804. Now, does that mean once prices trade, say, 814 or 813, that wave 5 of 3 is complete and we now need to, say, exit any short positions and then possibly begin buying positions for a fourth wave counter trend move? Absolutely not. What that means is, as it stands right now, the next move to the downside, if it's going to continue to achieve or have or illustrate or demonstrate Fibonacci proportions within the rest of the actual Elliott wave structure, this is a high probability target for the next move to the downside, wave 5 of 3. Now, once we start pushing closer to this area here of 815, 804, then that's when we want to do one of two things. We want to look at the substructure, and we also want to look at momentum. For example, I'll most likely be looking at RSI. RSI is a great tool to actually look at momentum, as is stochastic. Also, I'll be looking at possibly MACD. Now, the momentum in this move to the downside is very strong as we get down to this 815, 804 handle, meaning that say the distance, there's a clear distance between %K, %D. And what I mean by that is Notice over here during this big sell-off that we actually see a space between the two. They're not locked together as they currently are right now. But this tells me that the downside momentum is very, very strong, as it was during this phase of the market as well. That's what I'm going to be keeping an eye on. I want to make sure the momentum stays strong. Also, too, I want to look at the substructure. Now, if we get down to this 815, 804 handle, and we can count 5 waves down within this wave 5 of 3 sell-off, and momentum is decreasing, and I'm seeing possibly, say, a bullish divergence on in stochastic or MACD histogram or RSI on the shorter term time frames, 60-minute, 30-minute, 15-minute, then that will likely argue or suggest that we will indeed see wave 5 of 3 bottom here. But if we get down to this area and we don't see those subdivisions in place, if we cannot count 5 waves to the downside and momentum is still strong, then I simply will shift my attention lower, focusing on 769 through a half through 759. So these areas here I like to cluster also. I like to look for the tightly bound areas as these two levels are. Clear distinction. Again, we have a nice shelf of Fibonacci support here between 815 and 804, and then we have one a little bit lower between 769 and 759. These are my targets I'm shooting for as we see this blue wave 3 continue to unfold. Now, whether or not we stop here or continue lower is dependent, again, on the substructure of the current decline and also the momentum of the current decline. If momentum begins to wane and substructure is identifiable as finished or complete, then we'll stop looking for lower prices when we achieve this initial shelf of support. If momentum is still strong to the downside and the internal substructure is incomplete for an impulsive wave, then we will simply shift our attention a little bit lower, tighten protective stops on the position, and look for prices to push down to 769.5 through about 759. So I hope that addresses that question. Now next, let's move on and take a look at cocoa. And as far as cocoa goes, I still like the idea that we'll see a moderate push up over the next 2 or 3 trading days, just a little bit higher here. Put some pressure on, say, the 50% retracement of the initial wave 1 decline that comes into play at 3209. And then at that point, I will be looking for a tradable top to form as we anticipate the wave C of 2 sell-off down to 2941. And I'll be looking to achieve the 618 retracement of the larger wave 1 advance. So I'll push higher over the next, say, 2 to 3 trading days, look for a tradable top to form, and then another round of decline that should represent wave C of 2 of a larger corrective structure, specifically a zigzag that began in July. Now next, let's move on and take a look at lean hogs. And I did have a question earlier today about lean hogs because we went right to the 618 retracement that we had identified previously and began to turn down from that. Now the question is, because we actually hit the 618 retracement, does that mean that the pattern's done? Well, potentially. But this is where, again, I try and make the distinction or try and teach everyone in Traders Classroom as well as in commodity junctures that just because you can count a pattern complete does not necessarily make it so. Case in point, we actually identified the pattern, this wave 2 pattern complete at this high. We also did it this high, and I believe we even maybe tried to work a failure. I may have tried to work a failure at this point juncture as well. So there have been a number of times within this corrective move to the upside where it was potential or possible to identify the pattern as finished. This is why I'm kind of a stickler on the confirming price action. I want to see price action give us a sign, give us an indication that's undisputable, and then at that point, only that point, can we actually identify any swing high or any swing low as a tradable top and or a tradable bottom. Now, I'm not necessarily going to worry about, say, missing a day or 2 or 3 days worth of price action, or maybe even 2 or 3 weeks worth of price action, because the move to the downside that we're looking for should be very long-lived and actually continue well into the first quarter of 2015. So simply put, I think it's prudent to maybe wait for a day or two. Let's look for, say, a bearish engulfing pattern or an evening star formation to occur on the daily chart level. Let's also look for a movement back to below the extreme of wave B and have this current decline unfold in 5 waves. And then we can more aggressively look to, say, possibly sell a 3-wave counter trend move. It looks good. Can we count the pattern complete? Absolutely. Are we still holding within parallel lines? Yes, we are, which is why I continue to view this as a counter trend price move. As soon as we get above 71, though, that's a game changer. We need to come back and reevaluate the price chart. But if everything goes according to plan as we move into the next few trading days, we will indeed see a decisive sell-off below 66. That move to the downside, if you look at the smaller term time frame, 60-minute, 90-minute price chart levels, that should show you or illustrate a very clear 5-wave decline. And then we can come in and fine-tune our work and our analysis more from a trading perspective and look to sell possibly some type of 3-wave counter trend move. Let's pay very close attention to our candlestick price charts. I want to make sure we have something that's very supportive of the idea that we do indeed have a tradable top, very similar to something that we actually saw like back in June. And also too, I'll be keeping a close eye on the QQE. I'll be looking for the red line to fall below the QQE slow. That's typically a good indication of a significant trend change. And as always, I'll be looking for the RSI to fall back to below the 50-40 handle, which is, as you know, traditionally viewed as RSI bull market support. So those are just a few thoughts on today's analysis. As far as soybeans go, I like the downside, so my attention is focused there. Cocoa, well, up for the next 2 or 3 days. Ideally, we'll see a tradable top form. Lean hogs looks very exciting. All the pieces of the puzzle are in place in that market for a completed structure. Now we just need to sit back on pins and needles and wait for 2 or 3 days worth of price action to confirm our assessment that wave 2 is indeed done, because once that occurs, we'll clearly see this wave 3 sell-off that should easily push prices substantially lower. That about does it for tonight. Thank you very much, and I'll see you tomorrow.